Hello everybody and welcome to Profit Mission Control. This is Matt and today I want to go over the weekly recap for the week of April 14th, 2017. It's been a while since I published a video, probably a month ago. It seems like I'm on a cycle of once a month, but I am busy with other stuff. I do have a full-time job and I try as much as possible to make those videos and publish them for you guys to hopefully find something useful, some useful information in them. So this week has been kind of slow, and if you haven't noticed, the market is starting to show some signs of weakness. Now, it's not fully collapsing yet, but there are signs. If you look at the SPY, for example, and the major indices, they are testing prior resistance levels. So we've kind of maxed out or peaked out at the highs, and then the last few sessions, probably last week and before, we've been trending downwards, and we're trying to test every single support level that we've had in the last couple of months, which means the market is kind of choppy. That means that going long may not be the best strategy. And if you do decide to go long, be very careful because the momentum and the volume is just not there. So with that, we'll go over the week of April 14th, which was still a very profitable week and a very highly accurate week in terms of capturing profit. So just quickly, the disclaimer, I'll show it to you guys. I'm not going to go over it. Like I said, I'm not giving any advice, just presenting information that I find useful to me, that I think you might find useful as well. And it will help you maybe discover potential new ideas or new profit ideas for you and build upon them. So with that, let's go to our recap for the week. So this week I only published 2 launch lists, and I think it was a total probably of 8 to 9 potential launches. And we had this week a total of 5 launches, and 2 of them were actually on the same stock. So the first one, which was ZIOP, and that one, what was interesting about it is it's been on the launch list since February 16th, and last week I almost dropped it off. What I do is once I publish a launch list, I keep all of the stocks on my alerts in my brokerage account, and I do every month or so go back and kind of purge the ones that I think are have departed so much from their entry point, so they're no longer valid. And I decided to almost take out ZIOP from that list, but decided to hold on to it a little bit longer. And this week it decided to launch. So it hit our target price of 703. Let me go to the chart to show you a little bit exactly what we're talking about. So we'll expand this. So ZIOP, like I said, it came on the launch list on the February 16th, and it was starting to show weaker performance, and then it actually found support at the 200-day moving average, and since then made its way back up into that, close to that area. So that's why I decided to keep it on the list, and it did trigger an alert on just 2 days ago, which was on the 12th, and what happened was, if I go to the 15-minute chart, it hit the price, which I entered here, and then it quickly came back down and hit my abort price, which was kind of disappointing because it was showing very, very strength the last few sessions. So I said, if it does hit that target price again within the same session, I will probably go again for the trade and try it. And that's exactly what happened. It hit the 703 price again, and within 15, 30, 45 minutes made it to our price profit target. And not only that, I also held it a little bit further to 750. So I took it all the way to this level here. It had made it here, double peaked, and then I think I exited right at this point here. Now it does have potential. If you go back to the daily chart, you will see that once it's clearing this area, it might have room to go to the 777 area, maybe even higher. given that the volume, there's above average volume on the buying side. So keep it on your watch list. I did make my profit on it after losing the first 2%, and then I made a total profit back on that one of 7%. So that was a good trade. Next one was MDXG, and that one was a solid win as well. It all happened in one day. It triggered on just this last Thursday, right before the holiday. And that one, again, was fairly recent. We put it on the launch list. Obviously, you can see why. It was coming beautifully out of this correction and clearing all the prior daily resistances. And it went on the launch list for, so let me go back to the chart. It went on the launch list for April 11th, and just the 2 days after it hit the launch price at 10.05, and within, again, 15-20 minutes it was crawling up, and I ended up taking profit at $10.71, which was again a beautiful, nice trade. I mean, there was no retreatment. There was a little bit here and a little bit here, but since it launched, it kept going and going, and I think it potentially goes higher too. It's testing this high level of that day. It ended with a very strong finish, and even after hour, it poked very close to the high today. So I would watch it above 1070, 75, 1078 for potential continuation, depending on what the market is doing. It does have some room all the way to the 1130, 1140 type level range here. So that was pretty good. Next one was DRNA, and DRNA came on our list also on the 11th, and guess what? It did trigger on the 11th. So that's one of those where it actually works the actual day that it gets published. So DRNA, look at the huge volume that it had last week, recovering very nicely, broke through the 200-day moving average after clearing everything else, was on watch above this prior resistance level of 364. I put in a launch price at 365, and with a profit target at this former resistance at 383. And if I go to the 15-minute chart, you'll see that's what it did during that session. Again, quickly went in. Within 45 minutes, it hit the target, was out at 383 over here. So very clean, nice trade. And then let's see what else we got. Next one was AUXO, and this one was on Thursday as well. AUXO came on the list on the 13th. It did launch on the 13th, and we made a 3% profit on that one. That one was kind of choppy, and the spreads were pretty insane, so I didn't want to wait too long for that one. So again, this is right the 15-minute chart, and you see why I corrected very quickly. I entered here at the launch price of $6.50. Spreads were pretty bad. I almost got nervous in this area that I thought if the spreads are that wide, it might just quickly collapse, but buyers stepped in. It made its way all the way to 670, and then it was still below our profit target at 689. But then on the second 15-minute candle, when it hit that high again, 672, and didn't go through it, I decided to exit just because, to preserve profit. And I thought that with the spreads, this might collapse quickly, and it actually did. So I ended up taking profit at $6.70, which was also a very nice win from the launch list. And that was it. So not a whole lot of trades, but overall 4 successful trades. One that we had to abort with a loss of -2%. Average win for the week was 3.9%, almost 4%, and the accuracy was 80%. So that was not too bad. Obviously, the volume of trading was not that much. Usually, we trade between 15 to 12 to 15 kind of trades in a given week. This week happens to be slower week, which is another indicator that the scanners that I use are not really showing that the buyers are in control now. So this might be a choppy market moving forward, where you have a few days where things are being bought very, very aggressively, and then other days where things are very slow. We are entering close to the summer months, which are historically slower months. And then in addition to that, there's just a lot of volatility, a lot of uncertainty in the news, which maybe causes a lot of investors just to stay on the sidelines. So the momentum is definitely slowing down. And if we break through prior resistance levels, so let me show you something about the, let's go and watch like the SPY, for example. And I go on a daily chart. And if you look at the daily chart, we've been doing fairly good. We peaked here around 240 level on March 1st. And then since then, we've been trending downwards. So we have lower highs and lower lows. So tried to reach another high, got rejected, further decline, found a little bit support around the 50-day moving average, bounce off of that, and then it's kind of curling back down. Now we're passing, we broke for the 50, the 9, and the 20 days moving averages. So what do you think is going to happen? Well, I don't know, but this obviously one level that the market will probably test Monday, maybe Tuesday. If it bounces off of that and goes up, that's good. It's probably not going to break through this trend line unless some catalyst comes in. So if I try to put this trend line here, I would say that's kind of maybe a level where we should watch the market. If it does bounce off of this resistance or this support level, probably bounce back there and maybe keeps doing that until it decides whether to punch back and try to hit new highs or correct and start hitting some other resistance levels or prior support levels. And the next one, logical one, would be the 100-day moving average, which is trending, still trending upwards, but it's getting closer to the area we're in. So that might be, if we fail this one, that might be another support level. And then you have this prior support level from January timeframe. And then after that, it's up to the market to decide what it wants to do. We do have some level here, which is very close to the 200-day moving average. So I could say there's probably another region here of prior support around here, but you get the picture. The picture is we are trending downwards and we need to be careful going long. Going short might be a good strategy moving forward. So let's go back to the presentation. Kind of just summarize a little bit where we are from a portfolio perspective. We're still making profit. We haven't had a red week so far since the beginning of the year, which is fantastic. There has been, obviously some trades that went red, and you can't really see them sometimes on this chart because this is a weekly chart. So if I were to put a trade per trade chart, you'll probably see this going a little bit down and up, a little bit down and up, but it's overall trending upwards. We've had a total of 171 trades so far, and portfolio growth was 443% as of last Thursday before the holiday. And this is taking 2,500 shares per trade. So overall, looking at the statistics, and I started this last time I presented some of this information. Again, it's broken down a little bit in more detail, specifically on the profitable ones. So out of 171 trades, we had 50 that we had to abort, which represents about 30% of the trades. So we're overall 70% accurate, 71% accurate. So 121 successful launches. And out of those 121, 65 were launched above target. So we made profit above the profit target that was set prior to the launch itself. 11 of those trades were made at the actual target profit price, and then 45 were lower than that target price. So these are the things like I've talked about today. They're where you might see a lot of spreads. You might see that the momentum is not very strong. You've already got some sufficient profit, so you capitalize on that profit and just exit the trade. And those really, there is no magical way to determine whether a stock is going to hit its aiming the target price that I'm aiming at or not. It's really the skill itself and the art of understanding how the market is behaving and how that specific stock is behaving, and whether it's worthwhile to hold on or to just take your profit and leave. So overall, it seems like the system is still working. It's providing profitable trades. We're at 70% accuracy. I'm very pleased without that. And I think we're going to be challenged more and more as the market decides to correct further down. But we'll have to wait and see. Looking at the trends, so the weekly profit-taking accuracy, this is 2016, and then this is 2017. We're kind of dipped a little bit down to, the lowest part where it was like 50%, and I said I wasn't very worried. If I start seeing 40 or 30%, then I would be getting worried. We've since then we've been moving upwards and going upwards towards the 80% again. So this week was pretty good. We're trending upwards from that point, so that's good. The accuracy is still holding where I want it to be. The average weekly profit, other than the crazy stuff we had last year after the elections, things have kind of flattened out, and we're averaging between 5 to 10%. And overall average, I think from the prior chart, let me go back quickly here, was let's see here. I think we're averaging about 5% or so on a weekly basis, on a week by week basis, which is still very good, better than the S&P 500. So that's the trends, performance trends. Any stocks currently in flight? No, none of the stocks that we have on our launch list have triggered, and we're holding on to them. So we're either waiting for them to trigger, or we're just totally out. So this week I don't have anything to share from stocks that are already in flight. Now, stocks that are on the launch list, there are plenty of those, and these all come from as late as March 15th launch list. So we have one from March 15th, we have a few from March 17th, a couple from March 21st, and then a lot from April 11th and April 13th. So several of the ones that I posted on last week, actually none of them have really reached the launch price, and the reason is, again, the market is having a hard time pushing stocks to higher levels. So with that, we can go quickly review the ones that are on the launch list, and for that we'll go on the charts and look at the first one, VBIV. So that one was on the list since March 15th, and you can see why. It had a couple of huge buying volume followed by a huge volume selling, but still it was trending upwards, trying to challenge prior resistance at 662. If it does break through that, I think it has room to go to this level here of 715 with a loss around 636. So keep your eyes on that one. BBRG is the next one on the list, and that one has been again on the list since the 17th of March, butting close to our launch price. It did clear all the prior daily resistances, so I think if the market tries to behave a little bit and give us some upward momentum, we might break through that level and have a target price of 575. Looking good. It has a huge gap there, and that target level is really, again, that 7 or 8% that I always give for a stock that has had one of those crazy void days where it gapped down. Not a lot of people bought or sell in this area, so there's hardly any resistance if it does break through this level here. So keep that on your launch list. Keep an eye on it. It does look fairly good. I think my experience with prior stocks that are butting against an area of a former void, that it might take a couple of trials before it actually breaks through that. So you might see it hit again this level and retreat back, and then hit it again. But eventually, if the conditions are ripe, it will break through it and continue to go. Next on the list is ADMP, and that one, same situation here. was showing promise that it might break through this prior resistance, which is a huge void there. And again, like I said, it's trying to get to the area, not necessarily finding best of luck yet. Their volume, buying volume, is certainly higher. It's all above average volume on the daily. I think it's just a matter of time before we break through that 480 level, and when it does, we have opportunity to make a good 7 to 8% return on that one. Next is SNGX. SNGX curling back up from this level here. It has the 200-day moving average to challenge, which always makes it harder, but it doesn't hurt to keep it on our launch list. It's showing a double bottom here, so time will tell whether this decides to just collapse or actually test again this level and break through it and give us a profit target at 345. So the entry would be at 311 with a target at 345, which is this prior resistance here. Next one is NVCN, and that one is the most stubborn stock that I've seen lately. It had huge runs back here in December of last year, and I've traded it several times in this region here. Since then, it's been trying to break this level for the longest time, the $2.15. It attempted it multiple times, got close here, almost there, but still far away from it. So it's trending. I think what will happen with this stock is, and this is just my guess, that is going to continue to be trending sideways, and then we're going to have one day where news comes out and it's going to gap up, breaking through all of this, and starting somewhere in the 250 to 260 level. So we might miss it, but if things go up gradually, I think there's an opportunity, if it breaks at 215, to push to at least the 230, maybe even higher. So keep an eye on that one. I like it. It's clearing all its prior average daily moving averages, and volume is kind of light now compared to here, but still worth watching. PTX is the same situation. It's a stock that has been very volatile in the past. It's trying several times to break through this level, and I think after market on Thursday it did have this weird spike to 377. So it's kind of somewhere in this area here after market. I don't know if that's true or not. The volume was very light, so I don't expect that to mean anything. We are butting against the 200-day moving average, so I'm less confident of its ability to really give us this clean trade. But now all we have to do now, if it breaks the 200-day moving average and this level, then we have a potential for a good trade. So there's a gap here. That's why it looks very attractive if we can break this level of $4.15. Let's see, for PTX 448. So around, yeah, this level here. I would say $4.50 probably is a safe bet to enter and take it all the way potentially to $5. Next one is LEDS. That one is kind of interesting because when we put it on the launch list, it was coming close to its prior resistance. It did break the 200-day moving average. There was a catalyst for, I think their earnings was going to be released 2 days ago, and the earnings obviously weren't as good as expected, so it collapsed a little bit. It did find support at the 50-day moving average. Not really sure what's going to happen next. I do have it if it breaks the level of the 459 with a potential trade to $5, maybe 4.8, 4.95. This prior resistance here. Probably 4.94 is more realistic, but we're far away from that. So I think this is one of the stocks that will probably just fade away for a while. I don't think we'll have it on the launch list again next week, but we'll see what it decides to do. GERN, another interesting stock here that's gapping up. Had a couple of gap up days from a prior gap down. It tried to fill this gap. There's still some area that it hasn't really reached, and then it failed and came back down. Found still support at 200-day moving average. If it comes back and curls back up, challenging this to 74 level, then it has room to go to the 3 level. Now we've had a lot of volume. This day the volume was insane. If you look at, it's averaging 1 to 2 million shares per day, and then we suddenly had on April 11th or April 10th a 14 to 15 million dollar 15 million share volume day. So that's a good indicator that something is happening, and we should expect this to potentially punch through and make a good trade for us. DHF is the next on the list, and that one is tried to break through this level before, couldn't work, trending upwards, had some correction here, but then found its way back up. I think if it breaks this level here at 351, it will have this nice little gap to fill. Maybe first time take profit at 356. I think it has potential to go all the way to 360. You know, that's a 4-cent move. So, but anyway, the launch would be at 351. Everything looking positive from a volume and a trending perspective. So I like it. The next one is URRE. Now that's a uranium mining stock, and you know, there's been a lot of talk in the news about uranium nuclear weapons, and every time that happens, we get these kind of spikes on URRE and other similar stocks, UEC, I believe, and other mining stocks. So keep it on your eye, keep it on your watch list. It has been kind of choppy. You know, it goes through this $1.80 to $2 range. It's been trading through that range a little bit. It is above all its average day moving averages, daily moving averages, and getting close to that 218. I think if it breaks 218, there's a good trading range here to 240, 239, 240 to make a nice 8 to 9% profit there with volume. So hopefully volume will come in, and we see that continue to move upwards. Next one is EVRI, and that one is very, very strong lately. Let me zoom back here. That one has been through a big correction. You know, it had a one bad day, and just since then been trending downwards. Something happened here where it started trending back upwards, breaking back again through all the average daily moving averages, and actually getting there pretty quickly. So if it breaks this prior resistance of 606 level, 607 level, we think it has room to the 640 over here, which is a bit prior to this gap, and then maybe try to fill this gap. So keep your eyes on it. The volume certainly has been a lot of buying volume above average, so that's a good indicator. It probably will cool off a few days before it tries to continue its move upwards. Next one is NVDQ. So that's one of the stocks that is trending upwards, but has its 200-day moving average to challenge. So that makes it a little bit less attractive, but nevertheless still showing interesting signs of potentially breaking through this resistance level. Have that on watch for a break of $8.05, which is the prior days. I think what happened is I put it on this day thinking that it will break the prior day's resistance and try to push maybe through this resistance level here. So yeah, I'm not 100% sold on this one. You could watch it. I would be careful if it does trigger above 805. It may not actually go all the way to 849. It probably will test the 820 level, which doesn't give you a good profit to risk ratio. So it's up to you whether you want to bother thinking about this one or not. I'll keep it on my watch list. If it triggers the alert, I'll see how it behaves. I don't think it's going to be as strong as other ones because of the 200-day moving average and just the fact that there's two levels of resistance it has to pass through. I think I was thinking more close term around a daily type of breakthrough and then maybe capture a quick scalp. Next one is SITO. And that one showed pretty strong volume here, huge gap or huge move in one day from $2 to $3.38, and then retreated back a couple times. Still has a 200-day challenge, 200-day moving average to challenge. But because of this bullish day, there's potential that it might just continue to go and break through this resistance. Then it has the 200-day moving average right at this level, which is a prior resistance here. that I put. I think I just use a 200-day moving average as the area to take profit if it does break through this resistance. So the entry would be above 338, which is the high, close to the high of the prior day of that, that high day, and then with room to go to the 200 moving day average. Now, if this continues to move sideways, this 200 day is probably going to, pierce through this profit area. So at that point, it becomes less attractive, and we might want to think about a different trade, or just, ignore this stock altogether until it shows a better setup. ITEK is actually a good setup. This next one here, that one has a huge gap between $6 in one day. It went all the way down to $2.15, $2.20. So that's almost a $4 gap. And what it's been doing, trading sideways, and then we're starting to see the moving averages are curling back up. We still have to challenge the 100 and 200 day moving average, but we have some area to work with here from a profit perspective. If it breaks through this prior resistance here, which was the day before 2 days ago, it tried to attempt to start filling this void, but it didn't quite work well. It gave it most of it back, and then the second day it's starting to still poke through it. So keep it on watch. If it does break through the 225 level, sorry, I got 232 as my entry. If it breaks through the 232, then it has potential to go to the 248, 250 level with a stop loss at 225. Sorry, yeah, 225. So I like it for whatever reason, just because of this gap, and it has potential. So keep that on your watch list. And then last one is NAK. So that's another minerals type mining company. Suffered pretty significant drop, found support the 200 day moving average, kept striding that one, and then bounced through the 9 and the 20, made its way close to the 50, but closed below it. So that's kind of a warning sign. It still has the 100-day moving average to challenge. I think if it breaks through this level here, we might be playing in this zone, maybe for a nice little 7% potential profit. So keep an eye on it. The volume has been picking up, buying volume, and just because the whole mining and minerals and gold stocks have been picking up momentum the last few sessions, so this might just be a continuation with a nice profit target. So that's all we have on the list. And last thing I wanted to just remind you about is following the channel. If you like this video, please give it some thumbs up. I'd like to hear your comments. Follow me on different social media. I've got my account on StockTwits, Facebook, Twitter, and Instagram. And I'm very, very thankful for you spending the time watching this video, and hope that we can make more profits next week. Have a great weekend and a happy Easter, everybody.